Okay guys, so first week of November, we're going to look at the first trade of the week, which was on the DAX on Monday, and it was a pre-market entry. So just quickly, I've been quite quiet on YouTube recently. My sister is visiting from Australia. I've just not had the time to put the videos together. Well, it's also maybe a little bit of kind of laziness added on top of it, using the sister visiting as an excuse to take a bit of a break. So what I'm going to do is the week before, which was the end of October, I'll also bring up the Monday trades from that day also at the end of this video. Okay, so coming into this trade, it is pre-market, it's on the DAX. If you've watched any of my other kind of trade videos, first thing you can probably see is that the stop is a lot larger than I normally use. So the reason for that is, and it's something that sometimes people don't really do a lot of, it's kind of trying to think a little bit around what you're doing with your entries. Rather than just kind of jumping straight into the position, I'm kind of sitting back a little bit. I'm thinking to myself, okay, I'm about to get into a pre-open position here. It's the DAX. It's very volatile. When the DAX opens, very often it can spike around, 15, 20 points before it even moves in the direction that you're expecting. So just to have my stop really tight didn't make a lot of sense. And then if I look to the left, you can see that sort of very flat section of price action. That was kind of the sort of confluence for this trade. We'd broken up above it, we'd pulled back, and we'd retested it. And I already had the analysis that if that happened, we should kind of hit up into at least R2, but probably a little bit higher. So it made sense to just get the stop a little bit below there, because even if the market opens and spikes down there, it may just be spiking down to attract more buyers once again before it then makes that bounce. So that's kind of the thinking around the stop. Now the DAX had been rallying, and it has been rallying for a number of weeks. We've gone very, very strong bullish movements. One of the things that I learned sort of early on when I was trading, because I used to do it all the time, is just because a market's making a big move doesn't mean that you should try and then pick the top. And if it's been huge bullish rallies, trying to just sell into it, because it's a recipe for disaster. No matter how strong a market has rallied or how much it has fallen by, if there are still buyers and if there are still sellers, it can keep going in that direction. The worst thing you can do is just think to yourself, it's gone so far, I don't want to keep buying, or I don't want to keep looking for sells. So with this one, almost as soon as I get triggered into the trade, what you can see is it starts to then come against me, and it comes against me pretty strongly. Now, I've already adjusted my stop to a kind of larger size, and very quickly it becomes apparent that that was at least initially a good idea, because I would have been out of the trade pretty quickly for a loss. But this is the time when your mind starts kind of playing up, and it kind of starts speaking to you. And for me personally, I'm thinking things like, oh, this is moving against me. Why did I bother getting into a pre-market entry on the DAX? I should have waited until the open, and I could have blind bought the open, which would have been a lot easier. I could have waited until it maybe pulled back and tested something else. And this is all the things that are kind of running through your head. And this is why it's so important that as a trader, you're paying attention to yourself rather than simply your trading plan, because very often the trading plan is there and it works, but you are the thing that is getting in the way, and you're getting in the way by allowing your emotions, allowing that internal dialogue to cause you to do stupid things. So I could have, and I can assure you, back when I was kind of learning, I would have done this. As it was coming against me here, I could have closed this out for a loss, let's say a couple of £100, and then tried to short, because it's moving in a strong bearish way against me, and I could be thinking in my head, oh, I've got this wrong, I'm going the wrong direction, I'm going to be smart, and I'm going to kind of swap the position. I could have done stupid things like, through fear of having a full loss, just closing the position. As a trader, especially kind of when you're tired, so if you've been trading for a long time, we're getting up toward December now, and I am more than ready for a break. I'm sure lots of other people are as well. It kind of starts to drive you down, and if you've had a couple of losses fairly sort of recently to what you're currently doing, your current trades, that can also start to play on you, and that's when this kind of weaknesses can start to show up, and that's when your normal losses can then start to compound into silly mistakes. And it's those silly mistakes that are going to kill you as a trader. So it's very important to kind of always pay attention to how you are reacting, to your thinking and what that thinking is causing you to do. If you can sit back and you can sit on your hands, I've been doing this for such a long time that even when I'm thinking those things, because the thoughts don't go away, but my reaction to them changes. So I no longer make impulsive decisions. So as you can see, it's kind of coming against me here. I already know my stop is in the place I wanted it to be. I already know I have that analysis of the move to R2. I already know the market's done exactly what I wanted it to do. So even though I'm having all of these thoughts, my approach is not to do anything. Yeah, it's just, okay, it's terrible, it's moving against me, I feel awful, but I know from experience that if I just sit back and I just let my trading plan play out, follow the initial decisions that I made, unless something else pops up that is in my trading plan, then it's going to work out in the long term. The worst thing I could do is start to think that I have some sort of special insight into what this 5-minute candle is doing and what it is telling me. And if I start to allow the fear of losing money take over, then I start to make really silly decisions. So I just have to accept, okay, if it's going to be a loss, it's going to be a loss. As long as I don't then react to that loss by doing stupid things, I know it's something that I can handle. I know it's all part of trading and I can just move on. And then what we can see is as it starts to spike down, the buyers start to come in. And this is also quite important. Those are the thoughts that I was having initially. Now, as it starts to reverse around and turn more bullish, those voices silence and kind of Trader James comes forward again. And now I'm looking and I'm thinking, it doesn't work out this way, but now I'm looking and I'm thinking, okay, if this turns into another entry candle, that is then another potential setup, a completely separate setup, going in the direction of the analysis I already have, going into a trade that I already consider a really kind of top class, high probability trade. So I'm getting ready and I'm watching that candle to potentially get into a second position. So I've gone from it's moving against me, I'm losing, blah, 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 all that stupid internal talk, to instantly trying to reset myself and thinking with as much clarity as I can, because I know that it's potentially setting up into another trade. And that's kind of the ebb and the flow of being a trader. You have to understand you're going to have all that crap going on in your head, but you have to be able to kind of push it aside. And that's really what you're working on day to day as a trader. Once you understand your trading plan, it's all about figuring out how to, when you need to, silence that voice, step forward and make, hopefully, for 90% of the time, good decisions. And then for the other 10% of the time, you can make mistakes. It's all part of being human. So it doesn't work out that way, and instead we get the bounce up into the zone, up above. We start testing fairly strongly. I was looking for at least R2 or the horizontal daily support and resistance level. As we start to spike up, I closed the trade out for £444 of profit. The market actually continued rallying after that, but I wasn't expecting, or not that I wasn't expecting, that's not what I was initially looking for. And the market had already made such a big movement. I was taking kind of sensible, for me anyway, profit targets. And I got out for £444, which is pretty good. Okay, so pretty good trade, emotional roller coaster. It's all part of trading, but what the main thing was, the kind of decisions that I made, the decisions that I thought around before getting into the trade, made sense for that trade, or otherwise I would have had a loss. So from the Monday before, we had, so that was the 28th of October. So that was the first day of the week. I had a couple of trades. This one was a little bit of a cheeky one on the DAX for £300. And then on the FTSE, we got £512.50. So total for the day, £814 and 46, which was a pretty good day. It's a pretty good day, especially because the markets have been quite quiet. So there's been a few days last week especially where it's been really kind of slow and choppy, just days where I was just break even, and there was times where I wasn't trading at all, just because the market has been very, very quiet. So okay guys, that's everything for this week and for this video. Hopefully you're all going to have a fantastic November. I'm sure a lot of you are looking forward to the December break. We can get some time off also. As always, I hope that was helpful. I'm James Orr, and thank you.